Two companies connected to the AI economy are trading for less than $5 per share. One is building AI systems used in national security and defense analytics. The other is developing technology that helps retailers use AI to predict what customers want before they even search for it. Yet, while the global AI race is attracting hundreds of billions of dollars, these companies are still trading at roughly $2.72 and about $3.75 per share. Now this is where things get interesting. Most investors are focused on the companies building AI models and chips, but behind those headlines is a completely different layer of the AI ecosystem: infrastructure. The systems that actually connect AI to real-world industries. So the real question becomes, are these simply overlooked small-cap stocks? Or early players inside AI infrastructure that the market hasn't fully noticed yet? Let's take a closer look. AI is no longer just about chatbots and large language models. It's becoming an entire infrastructure ecosystem. We're talking about AI-driven defense analytics, automated retail intelligence, real-time consumer data systems, smart automation platforms. And this is where markets sometimes become inefficient, because most investor attention goes toward the companies building AI models and chips, while the companies operating inside the data and intelligence layers feeding those systems receive far less attention. This is exactly where pricing inefficiencies usually exist. It's also the type of layer institutions quietly monitor long before broader market attention arrives. Now, to be clear, this doesn't guarantee anything, but it helps explain why certain smaller companies inside the AI ecosystem can suddenly become relevant when adoption accelerates. And this is exactly where smaller cap opportunities tend to form. Imagine walking into a retail store or shopping online and having AI instantly understand exactly what you're looking for, not based on basic demographics, but based on real-time intent signals. AI analyzing behavior, product interactions, and consumer patterns to deliver personalized shopping experiences almost instantly. This is where things start getting interesting, because one small technology company has built an AI platform designed specifically to help retailers understand what customers actually want in real time. But here's the catch. Most people still think of AI mainly in terms of chatbots and generative models. Yet, behind the scenes, companies are racing to build AI systems that power commerce infrastructure. And later in this video, we'll look at a second company operating inside a completely different AI layer: national security and defense analytics. Retail and e-commerce are quickly becoming one of the largest AI adoption environments. Businesses want AI systems that can understand customer behavior, recommend products intelligently, optimize conversion rates, automate digital shopping experiences. If AI continues expanding inside the global retail industry, which analysts widely expect, companies building AI-driven commerce infrastructure could become increasingly valuable. Because if this layer expands, companies operating inside it naturally become critical, and the stock itself has experienced some interesting movement. At different points during the broader AI excitement cycle, shares traded noticeably higher as investor attention shifted toward AI-related technology companies. Then the stock pulled back as small-cap tech names cooled across the market. Today, the company trades at around $2.72 per share, which raises an important question. If AI-driven retail systems continue expanding, could companies building that infrastructure eventually regain market attention? The company focuses on AI platforms designed to help retailers deliver personalized product discovery and intelligent shopping experiences. Its technology integrates with commerce platforms to help businesses better understand customer intent and automate product recommendations. In simple terms, it's building AI-driven commerce infrastructure, and this is where things shift. Because when you actually look at the company behind this technology, you find Resolve AI PLC, ticker RZLV, currently trading around $2.72 per share. Seen data. Now, obviously, this doesn't mean the stock suddenly moves tomorrow. AI commerce is a competitive space, and smaller companies often need time to scale their platforms. There are also real risks here, but the reason companies like this remain small cap may simply be that the broader market is still focused on the largest AI players. And timing, as always, becomes the key factor. Now, before we get into the second stock, here's something most people completely overlook. Even though AI demand is exploding across multiple industries, some companies building core infrastructure layers still experience delayed price reactions in the market. And historically, those delayed reactions are exactly where smaller cap opportunities sometimes appear, which brings us to the second company. But unlike the first company, which operates inside AI commerce infrastructure, this second company focuses on something very different. AI systems used in defense, intelligence, and national security analytics. Where the first company helps retailers understand customers, this one helps organizations analyze massive datasets for strategic decision-making, and this is where things get interesting. The company develops AI-driven analytics platforms designed to process complex data environments. These systems can help organizations analyze intelligence data, optimize defense planning, automate decision support systems, process large operational data sets. In other words, it's part of the growing world of AI-driven intelligence infrastructure. If AI adoption continues expanding inside defense and national security systems, platforms capable of analyzing complex operational data could become increasingly important. Governments and defense organizations are already investing heavily in AI analytics systems, which means companies operating inside that layer could benefit if adoption accelerates. This stock has also seen significant volatility. At earlier points during the AI market surge, shares traded noticeably higher as investors searched for AI-related companies. Then the stock pulled back alongside broader small-cap tech stocks. Today, it trades at around $3.75 per share. So again, the question becomes, if AI-driven defense analytics continues expanding, could companies like this regain investor attention? And this is where it gets interesting, because the company behind this AI defense analytics platform is Holdings Inc. ticker, BBAI, currently trading around $3.75 per share. Again, this doesn't guarantee anything. Defense technology markets can be complex, and smaller companies often face scaling challenges. There are real risks involved. But the gap between AI adoption in national security systems and investor attention towards smaller players may explain why companies like this remain relatively overlooked. So now we have two very different AI infrastructure stories. One focuses on AI commerce and retail intelligence. The other operates inside AI defense and analytics systems. The first company benefits if AI transforms online shopping and product discovery. The second could benefit if governments and organizations expand AI-driven intelligence platforms. So the real question becomes, which type of AI infrastructure gains adoption faster? Retail AI systems may scale quickly through digital platforms, but defense AI infrastructure could grow through government spending and national security programs. And this is exactly the type of decision tension investors face when evaluating early-stage AI infrastructure companies. Stepping back for a moment, both of these companies represent a layer of the AI economy that many investors overlook. Not the models, not the chips, but the infrastructure powering real-world AI applications. Historically, these infrastructure layers tend to move later in major technology cycles, but when adoption expands, they can sometimes move more aggressively as the market begins pricing in their role within the ecosystem. And this is exactly the type of layer institutions often monitor quietly. If you enjoy discovering smaller AI companies operating inside emerging technology layers, make sure to stay tuned for future breakdowns. Because sometimes the most interesting opportunities exist in the parts of the market that receive the least attention first.